This is exactly to your point, Chris. He more than tripled his numbers by just doubling his activity. And the whole idea behind it was the law of large numbers when it comes to activity and work ethic. He put the dials in, he put the calls in, he put himself in the office for X number of time, and he was no longer tricking himself that I'm working hard. Yeah. And the craziest thing, Chris, his closing percentage is exactly the same. Like that closing ratio is only going to excel, and if he maintains the same activity, the production and income goes through the roof.
Hey, welcome back to another episode of Life Insurance Academy podcast. I'm rocking the mic chicka, with DJ Jazzy Zach.
Oh, I appreciate that.
Yes. Well, that was your
They call me MC Owain.
What was it?
MC Owain.
I don't know what that means.
How you spell my last name.
Yeah. I love when...
Look up because it's over your head.
I get it. Zach, we are talking with our listeners about what makes insurance companies work and what and how that transfers to them. Okay.
If you're going to talk to me in this tone, will you at least do it with your chest?
Yeah.
Right?
No, I've got a little bit of a raspy voice. We had our big event with our people, and I'm a screamer when I get excited. Let's go! Woo! Lots of woos.
Yeah.
I'm sorry if I broke your eardrums, but if I sound like I've smoked 5 Marlboro Red packs today, I have not. I'm only done 2. But that's why you hear a little raspiness. But,
or you just wrote a couple nice big policies in a face-to-face sit. I mean, it could be either one of those.
Yelling?
the cigarettes.
Oh, the cigarette.
The cigarette portion.
Yeah, that's happened before too, yes. Mr. Jones, can you hear me? But we do have some helpful tips today. Zach, let's talk about insurance companies and why they're the biggest buildings. This is a good intro for our listeners. They're the biggest buildings when you go into the cities. They make the most millionaires in America. What makes that work, and what's our topic today? What are we addressing?
Yeah, so what we want to talk about today is the law of large numbers and how that applies to the insurance industry, how it applies to your everyday life in selling insurance, potentially building your agency, growing your team, but also how you're investing yourself on a financial and personal level. And to answer your question, Chris, the reason that the insurance buildings are the biggest buildings, the reason that the insurance name is some of the biggest sponsorship brands and some of the biggest sports out there, like golf, for example, insurance companies, it seems, is like on everybody's hat and polo, right? Yeah. Mm-hmm. Is simply because they have a whole bunch of clients. They have a ton of people paying a premium for a policy and a promise, which is peace of mind.
Yeah.
And it only works in the aspect of larger law numbers. There's no such thing as a small building large insurance company. Like there's not really small insurance companies out there. Mm-hmm. Simply because the way it works is, and it's on a micro and a macro level. On the micro level, it's simple. A client pays for a policy, pays a monthly premium that when or if, depending on the policy you have, they pass away, their family is going to get a financial benefit to help take care of any costs or anything associated that's left behind. In exchange for that, their premiums go to the insurance company. The insurance company collects their premiums, and everybody else that pays into it, they then invest that money and try to grow money off of everybody's paid premiums. But they also know that they will have to pay out death benefits to their clients at some point in time when they pass.
Correct.
But the way the numbers work, and I'm not an actuarial, but the way the numbers work is it only works in a very large amount, but they know that there's a certain percentage of their client base that will pay premiums over a number of years, and the policies will either lapse or cancel or be surrendered. And there's certain policies, such as whole life policies, that they know that they will pay out at some period of time. So it works out for the insurance company because they have all these premiums coming in now that they can invest and grow money off of your premiums, and they know they're going to have to dish some back. Mm-hmm. At the same time, it works great for the client because they know maybe I don't have the financial means set aside, or maybe I don't have the peace of mind, or I can't save this amount of money to take care of my family. That if I just pay just this little bit of monthly, I know my family's secure no matter what happens. So it works good for the client. It works good for the insurance company. It's a win-win situation, but it only works in the law of large numbers.
That's right. And you may have heard that phrase, law of large numbers, when you took your life insurance test. And, Zach, when you were discussing that, and the actuaries do, they look at mortality tables and all of that stuff. I mean, they're the ones who actually see the matrix to determine the calculated risk that they can take with investing premiums. And of course, it's all indexed. So there's, from what I understand, not much loss or risk of loss, but there are death claims that have to be paid. But they are making money because of that law of large numbers. And that law basically states that if you put enough large numbers, if you get enough people in there that to mitigate the risk, that's the idea, to mitigate the risk, that the needle's going to tip towards profitability. If you have enough large numbers, needle tips towards profitability. Yeah. The reason we wanted to intro this conversation is because it's true. It's a true statement. It's worked for insurance companies for hundreds of years. If it doesn't work for an insurance company, it's because they were terrible marketers. You said there are no small ones, but there probably are small ones that don't make it because they have either a bad product or they're bad marketers. I don't know which one it is, but
typically what happens is a larger insurance company ends up buying and taking over that brand.
Yeah, that happens a lot too as well. So they're increasing their large numbers. So if it's true there, is it true in other areas of insurance?
Yes.
That's the question.
Yes.
Okay.
Oh, you wanted more?
Yeah. Yes, I did.
Yeah, and I think exciting. The cool thing is thinking about this topic of law of large numbers. It's pretty cool to look at and think about how it applies to us listeners, how it applies to insurance agents just getting started, or even experienced agents. Typically, experienced agents means you've been in the field for a while, you've survived the gauntlet of the first year, and you understand the law of large numbers. But the three main areas that it really focuses on that we kind of want to address today, Chris, is in the area of investments in leads. Kapow! Right? The other area is, that was aggressive. The other area is when it comes to work ethic and amount of effort you're putting in. Cha-ching! And then the third one is recruiting and growing your agency. The Kung Fu
carries the message for us.
I love it. I love the energy.
We didn't practice that, guys.
No, I don't think anybody expected that, to be honest. But if we start with the first one, Chris, we start with when it comes to lead investments, and this goes back to the same conference that we were at, except I did a few less woohoos than you did. Yeah. So I was able to maintain my voice somehow.
I'm proud of you, bro.
But the thing I love about this more than anything is having the ability to have side conversations and to connect with people and figure out how they're choosing to run their business, what success and wins are they having, but also what are areas for improvement. And the cool thing is the openness that people have with sharing some of these gaps of how do I get to that next level, what I need to do. I was able to connect with one particular agent that comes to mind. And this agent was talking to me about their success and their numbers and how do I get to the next level. And some of the questions I was asking them was, well obviously, like for me, it's always about the numbers. The numbers are facts, right? Mm-hmm. The numbers usually don't lie. But I was starting to figure out, okay, well, what does your week look like? What does your flow look like? What type of leads? What type of market? How are you serving them? Answer some of these questions. Long story short, they were in the final expense market.
Okay.
They were seeing a lot of people face-to-face, but do some stuff over the phone, but majority face-to-face. And I was talking about, okay, well, let's focus on what does your activity look like? And let's back it up a little bit. How many families are you actually presenting to on a weekly basis? And when we started to lay down the law of large numbers, before I was able to present this idea, he was a pretty successful agent. He was sitting with about 7 to 8 families a week and doing presentations. And then so my curiosity is with yours is, why? Like, what is limiting that amount of
Correct.
families we're sitting with? His closing ratio was about 50%. His lead spend was actually fairly low. So his ROI percentage-wise on that lead wasn't that bad. But the activity was still decently high, and we started to find some inefficiencies in some of the workflow. Some of the inefficiencies that we were looking for was, number one, like, what is our availability to work? If our availability is high, or we have all week, or we really are flexible because this is our only opportunity and job, and maybe we don't have other family obligations that are preventing us from working, then it lets me know our first area that we want to address is the law of large numbers when it comes to investing in leads.
Yes.
Okay. And the concept we wanted to talk about was, if we're only going to get, say, 10 to 12 leads a week, maybe 15 leads a week.
And this was the scenario.
This was the scenario.
We'll say
this
Agent X to make it
Agent
very,
X, that's right.
Very
This was the scenario. So his leads to sit ratio was pretty good. His closing ratio is average. But the profitability is not, it doesn't mirror, in my opinion, this agent's skill set or desire or what they're trying to accomplish.
Correct.
I don't see any crazy issues with this other than we need to scale up. Like we need, it's time to turn pro. And so the first thing is we need to find a way to sit with at least 15 families a week and present. In this scenario, again, face-to-face, again, final expense. In his scenario, we need to sit at least 15 families a week. So the question is, how many leads do we need in order to get there? That becomes a conversation about the investment side of leads.
So if you're looking at this conversation with this agent, he's probably doing anywhere between $1,800 to $2,400 premium per week.
Yep, that's exactly right.
And he's getting 10 to 12 leads. So his number that he's investing in this leads is somewhere between $250 to $300 a week.
That's exactly right.
And he's putting this into a machine.
Putting it in.
And this machine is give us some sound effects, Adam. Thank you. And out of the machine, he's pulling out $2,400. And the question is, how do I get more $2,400?
Exactly. That is exactly the question.
The agent was literally asking.
So the first thing we have to look at is we have some variables that we need to consider. One, time, right? We don't get time back.
Right.
Time is very limited, but it's one of our most valuable variables and assets that we have in life is time. So we're spending this time. And here's the thing. You may think, oh, well, he could have done that amount of activity, in a short amount of time, which is potentially true. So we started to look at the work schedule of this, right? Mm-hmm. And he was beginning to be starting fairly early, between 9 and 10, and would finish up somewhere around 5:30. And this is where the question was, okay, why are we finishing up at this time, right? Well, one of the obvious reasons is we don't have enough fresh opportunities to keep us going, because you can't work all week on 10 to 15 leads if you're working that many hours a day. So the unintended consequence of doing that is
you're just driving around in a circle.
Right. And what would that do to you?
Drive you crazy.
You would go crazy. Yeah. So you start to have this negative thought. There's not any more left in these leads. I don't know if I'm going to get anybody. I'm getting exhausted. I'm wasting my time. Now, my time that is constantly ticking is not worth the results or the assumed results we would get by staying out. The reality of this is And we talk about prime time, Chris. And you tell everybody what time prime time is?
It's somewhere between 5, 8:30, 9 o'clock.
That's right.
That's beautiful.
And,
that is money time.
And I told Agent X here, I said, I would make a bet with you that you could work from 9 or 10 in the morning till 5 every day. Yeah. And I just worked from 5 to 9, and I would outsell you at the end of the year.
Boom.
Same area, same type of leads. And it's not any skill set thing. It's just me being available when our clients or the people that we serve are the most available.
Right.
And I begin to say...
And this is true, by the way, this is true for final expense and mortgage protection.
It's a huge one.
They're usually working full-time jobs. And
it's also true for anybody presenting IULs, anybody meeting with families for potential annuities. This is the time of the day that regardless of your job or your career or your babysitting obligations of the grandkids, whatever client, this is the time of the day that they got their goal of the day finished, their chore of the day, their work of the day, and now they have this little window of free time. Also, on Agent X, I said, now, he felt that he was done with work, that was his working hours, right? Mm-hmm. I said, but that's also the time that you get to relax and you get to chill out. And this is where you're the most approachable and vulnerable,
right?
Which is also true for your clients. That's why we want to be available at the times that they're most likely that they're going to be available. And it made a lot of sense. And I've learned that from experience. I've learned that from you, going through that. So when we talk about getting back to the leads and how this crosses over to the work ethic and the law of large numbers, if we can, and I know you're the mathematician here, Chris, if we can go to at least 15 presentations, and I'm not saying he's going to get better. Let's assume his closing ratio is exactly the same.
Yeah.
That means he's going to close probably 7 to 8 policies now, rather than, the 3 to 4 that he was closing. Now his lead investment will probably double in this situation, but the amount of time he's in the field is most likely going to be very similar. The difference is he's not going to the same homes over and over and over again. He has fresh new opportunities, so his week feels different. It feels different. Mm-hmm. The mental aspect of that feels like a huge win.
Yeah.
And I want to add this when it comes to the leads. Our opinion when we talk about leads is you're going to donate one application to go to your lead bill every time, because the whole idea is you can't sell half an app, right? You cannot sell half of an app. The client can't pay for half the month. Like, it just doesn't work that way to cover your leads. So one application, regardless of how large it is, that's going to be dedicated to cover your leads. So if you already know that.
But and I want to clarify this, because that is marketing that you're paying for. Mm-hmm. And if you're a business owner, you would have to pay for marketing anyway.
Correct.
So if you're running a sandwich shop, 3 sandwiches, 5 sandwiches, 10 sandwiches would go to your marketing costs.
Yep.
So that is a universal truth of running a business. Just in case you're thinking, and I had thought this before out there, especially new, well, why am I paying for this? Well, you're going to pay for it, or somebody else is going to pay for it. But somebody's paying for the marketing of a business, and you get to be in charge of your own business.
The only way they generate revenue is helping serve a family and putting a policy in place that you receive a commission on. Is the only way it works. So we know that has to be done. So mentally, if we have 12 to 15 opportunities, and the first 3 people told us, no, thank you. Right? Or heck no, or get off my porch, or I'm not interested, or I got something in place. You can pick the objection. And then we're dwindling down, and we're only 2 hours into our Monday. What does that do to us mentally? What type of pressure, what type of, fear of loss of our return on investment do we have? We become desperate. We begin commission breath, which then affects our entire process. Our opportunities become limited. We start to freak out, generates anxiety and fear, right?
Correct.
But we have to sell at least one for that revenue to come to pay for, to cover our lead cost. If we're going to sell one policy to go to leads anyways, why don't we just sell one policy that's going to cover 25 to 30 leads instead of 12 to 15?
Right.
Because now we have those same 3 people that tell us no at the very beginning, but now we have 27 other opportunities that we're able to serve clients. So we don't get panicked. We don't start freaking out. We stick to our process of serving people the right way, being the true difference makers in our life, and then we know it's going to be easy to have a return on investment.
This conversation goes well with the podcast Roger did about lead investment, or I think you can go back and see that. Ding, you can see that episode, because talking about taking that same amount of money and putting it back into the machine. The thing I noticed with agents, Zach, this agent X, actually the numbers aren't terrible. They're pretty good for what their experience is currently. Typically, when you double those numbers, it has an exponential result.
Absolutely.
So you wouldn't see, like, I don't think I would expect to see if an agent is getting 24, 25 leads, I wouldn't expect them to write 4,800. I would probably expect them to write 4,800 to 6,000 or 7,000.
Oh, absolutely.
It increases because you're increasing your opportunities to sit with more couples, more families, get more referrals, and those types of things. The other thing, I don't think I want to talk about that workflow a little bit, because we're addressing really 2 things: the work and the leads of law of large numbers.
Correct.
If you limit yourself, we'll do face-to-face, 10 to 12 leads, and you're working, let's say, 2 counties in that space, then your drive time has increased quite a bit, because they're spaced out. That's not like you're just on one street. That'd be weird. So it's spaced out over an area, right? If you double that, you're closing that gap of drive time. That's why I was always a big lead investor.
That's a huge one, because you could reroute those leads and work different parts of the county in order.
Correct. Yes.
Yeah.
And it's the same on telesales. You're right. Like you buy even like 50 leads getting started, and I'm guessing most people, when they're buying them, they're buying leads that are with less intent because they're just trying to get started. And they'll say, well, I'll get like 50 leads for the week, and you're dialing from 9 to 9. I always say, if you're launching a rocket ship, you're fighting gravity, and you can't go halfway and say, man, my foot hurts. Like, I want to take my foot off the gas. It doesn't work that way. So you have to put in that time to get through the learning curve. And if you're, you get 50 leads and 15 have hung up, then you're going through that cycle of calling the same. Even if you have multiple batches of aged leads, it feels different. It just feels like you're not just running through the motions, and you're not wasting your time.
You're busy, you're confident, you have opportunities, you have plenty of people. And I have 2 really good examples of that. We recently did a podcast with Kevin Montez, which you can find it here. Bing. But what the cool thing about his story is he went from barely selling to selling a ton. Yeah. And this is all over the phone, right? Which what everybody wants to do. But when we talk about law of large numbers when it comes to work ethic, when he actually figured out to be accountable to himself, to be honest with himself, that self-awareness to track his own numbers, the hours he was working was sub 20 hours a week of actual activity. And
but it felt like he was working 40.
It felt like, and that we always have feelings on that, because you may get a client call on a Saturday. Well, I work 24/7. I'm available. I'm open. But if you drag your feet in, you're playing around with your CRM, you're trying to figure this stuff. But what is the actual work time, right? And the cool thing was, and you could check that podcast out. This goes exactly to your point, Chris. He more than tripled his numbers by just doubling his activity and being accountable to his time. So that exponential growth really went to another level when he realized that now he's actually putting in real raw, Adam's correcting me here, 6 timesing. 6K to 16. Yeah, 6K to 16K is where he went earnings-wise in that very short period of time. And the whole idea behind it was the law of large numbers when it comes to activity and work ethic. He put the dials in, he put the calls in, he put himself in the office for X number of time, and he was no longer tricking himself that I'm working hard. Yeah. And the craziest thing, Chris, his closing percentage is exactly the same. he's just putting in those
Isn't that
extra
crazy?
activities. It's
Right.
literally what we're talking about right now.
But what I'm anticipating for Kevin, I believe that closing percentage will increase
100%.
because he's putting the right activity in and he's learning. He's giving himself opportunities to learn.
The exposure to objections and learning opportunities
Yes.
and closing techniques, purely getting more comfortable with your tone, understanding how to read clients more, like that closing ratio is only going to excel. And if he maintains the same activity, the production and income goes through the roof.
That's right.
The second example, which is really cool, shout out to Aaron Hicks, is one of the top people I know when it comes to face-to-face sales. He, you okay, sir? But he started. He actually came into the office yesterday and was just going to start doing telesales just right off the bat.
Yeah.
Right, never done telesales, was ready going to do it, and the same concept. He bought some leads to run telesales on, and he wrote a pretty good size app off of it. And the first words he told me was, boom, that app paid for all my leads. Now every other lead I have, this is all pure profit from here on out.
He understands.
And what that does to you mentally, you're playing with house money. You're playing with house money, right?
Yeah.
It's you can't lose at this point. And when you do that, you're free. You're uplifting. It doesn't matter if they don't buy or do buy. You're able to really care for the clients, put them in the right position, have fun, but get better and learn this craft. But it immediately removes all the pressure, which is really cool to see.
That's great, man. I love it. If I told you, Zach, that there's a vending machine outside the office that you put $250 in and $2,500 comes out, what would you do?
Two things. The first thing I would do is I would put $250 in and $2,500 come out. The second thing I'm going to do is I'm going to have Adam help me scoot it away from the wall, and we're going to see what the manufacturer is, because I need to buy 10 more of those machines.
That's right.
Right?
That's right.
That's exactly what I'm going to do.
Yeah.
And then I'm going to set it up to where you put that money in to do it, and maybe I get a 10% fee off the top. That would be pretty cool.
Yes. And that's really the final piece we wanted to discuss with you guys is the potential of this business. Many times we get locked into sales mode, and we have people who have a lot of success. But this is the thing we do know is that when you stop selling in life insurance, that income stops. Like you go on your 3-week vacation to Rome or Spain, like Zach does every 3 weeks.
Yeah, right.
You go on those vacations, and that income will stop if he hasn't been mindful of the opportunity. I know it's changed your life. I know it's changed my life.
Yep.
I know the people we have on here as guests, it's changed their life. And many times agents make the mistake of not extending that opportunity or not extending it enough times in the law of large numbers, because we know statistically that 92% of agents fail. We know that. And that means that only...
But do we?
No, those are the stats from
right, but
some people,
I mean, maybe, but it's true. It's true for you, right? But is it true for me?
The 92%?
Because we never, when we're recruiting and growing, this is an actual experience for me. Like, we don't feel that that's true with us.
No.
And for an example, when I started building my team out, industry-wide,
correct.
But it never applies to us. And I don't know why we can't gather this concept. But if let's just say we invest in 5 new people that come on, right? Numbers wise, maybe one will make it, according to the 92%. Maybe one, right? And maybe the next
What was
batch
the number
of 5,
you said? 5?
Maybe if we run on 5.
Yeah, they wouldn't even make it according to the 92%.
Right.
Like we
that's
would
what I'm
have
saying.
to have
Half of an agent is probably going to make it, right?
Right.
But in that scenario, but here's the problem. If we bring on 5, we overvalue our time, because we see everything in the micro instead of the macro, instead of what's in the very short time, what's going to give me my highest return on investment this month or tomorrow. And it's me not worrying about training Chris. It's me selling this policy over and over and over and over and over again. But that also takes away from the vision and the duplication, and not only sharing an opportunity with somebody to grow and develop and build their own business and change their own life, but for you to be able to reach levels and that you've never thought about reaching, because you're able to grow and build an agency around you that's going to help you and change the way you grow and develop as a person and a business owner. But if I have 3 of those 5, I want to give up forever. I don't want to recruit anybody else. It doesn't work here. It's the system. It's the comp. It's
Correct.
It's everybody but me. But the reality is my time is too valuable to continue to share an opportunity if I'm going to train there for 2 weeks or a month or 3 months and they don't make it. But if we know the numbers, the law of large numbers work. Everybody knows or have heard somebody or knows of somebody in this industry that has a big, successful team, and you think that they were born different,
right,
or that they're built different. And the reality is, the only difference is they understand the law of large numbers when it comes to recruiting, mentoring, and growing a team, that they're constantly going to be bringing new people in,
right,
training them, investing them. And again, it's giving them an opportunity. You're not giving them a guaranteed life, right?
Right.
They still have to take the opportunity and do something with it.
So I'll say this, in some good systems, you may be able to close that gap to 50%.
Yeah.
Let's say it's 50, right? And you get 10 people in 5 find success, because ultimately it is up to them. And I will tell most people the reason they fail is because of the conversation on the front side.
Mm-hmm.
It's the law of large numbers on work and leads. That's typically where that failure happens, and people taking ownership of their business. They're used to being told what to do. So if we can find 5 that can win, is that a win? I think it's a win.
Oh, it's a major
strong win. Yeah, absolutely.
Because you probably should have hired 90 of them to get to that 5. Right. If you didn't hire and train 90 people to get 5 good people, then that's a major win on your part, because that's what the industry numbers tell us, that you should invest and interview 90 people to get going. And again, to get 90 people to get going, you're probably interviewing 300 to find the 90, to find the people that actually get through licensed, to actually make it. It's pretty incredible, but it's no different, Chris, than when a new agent comes on board and they're scared to death of a chargeback or their persistency.
Don't want to sell.
Right. Yes. The problem is, if you only sell 5 policies a month, right? And let's just so happens 2 of those cancel, or that couple cancels, it like half your income is gone. Right. The reality is, right? Mm-hmm. If you sell 4 policies and 3 cancel or 1 cancels, like it affects you so much. But it's always going to be somewhere, again, industry numbers around 80%. So out of every 10, 2 are going to fall off, if you just know that. But the difference is, if you're writing 30, 40 policies a month, 50 policies a month, you're not going to feel when 6 or 7 fall off. It's just part of it.
Right.
Now, you should do everything you can to prevent that ahead of time, maintain that relationship, make sure they're getting everything, make sure you're following through, and you can really shrink that number into the high 90s. So 95 or higher % of your business is getting approved and staying on the books as your clientele. That's the goal.
Yeah.
That's what we want to get better at. But the law of large numbers, I'll get it one of these days.
You will, buddy.
It applies to everything we do. And here's the crazy thing, Chris. Every single one of us want to have the law of large numbers when it comes to deposits in our bank account.
Yes.
But that's a result of putting the law of large numbers into place when it comes to leads and investment in your business, your work ethic, and recruiting and growing your agency.
Very good. Very good. Well, I hope this was helpful for you guys. Put those numbers into your system, because you will win. It's, again, you have to work through this learning curve on the front side of this. Your new agents have to work through that learning curve, and they need to understand this too. If you are growing your team and having these types of conversations about growth, again, work, leads, and recruiting, all of them depend on the law of large numbers. Thank you guys for checking out Life Insurance Academy. If you wouldn't mind, hit that, smash that, like us. I don't know what the system is, but I'm just messing with Adam. He's always giving me hand signals in the back. No, please like the podcast, share the podcast, and check out lifeinsuranceacademy.org. guys, we love it when you comment because we like to chat with you as well. So throw some comments in there. If you have questions, feel free to ask them. Adam loves to answer those questions. He's a sport. Thank you guys so much. We'll catch you on the next Life Insurance Academy podcast.